it is interesting that we have round tripped the entire war premium that we saw after the U.S. Iran conflict kicked off. But I would note that the oil price is still up about 20%, something like that, year to date. And the conditions at the start of the year were fundamentally bearish. The expectation was quite a bit of oversupply. And I think the market, now with the Strait of Hormuz reopened to some extent with some flows coming through, we do seem to be revisiting that mindset of oversupply. But I think the big question is, do we try to refill the inventories that we depleted over the last 4 months or thereabouts? So if your mindset is you got to refill the inventories, well, we're not an oversupplied market. If the inventories don't matter, then we are oversupplied perhaps here at the moment.
So talk to us for a moment about gas prices, because I think folks see this big pullback in crude and they're like, oh, I'm going to start feeling that at the gas pump. We're not really yet, right? I mean, the average is $3.91 a gallon, according to AAA. President Trump said yesterday he wants the Justice Department to look into why gas prices aren't falling as quickly and as robustly as we're seeing crude. Just connect the dots for us as to why it's not a one for one.
Well, it will be a one for one over time. There's just a little bit of a lag. So if you were to plot the U.S. average retail gasoline price against oil price, you're going to see a very tight correlation, perhaps with a week or two lag in between. And so I think that you'll expect that the gasoline price will follow the oil price very closely. And there's no fundamental reason that it shouldn't. So my expectation is that you'll see gasoline prices quickly follow what we've been observing in the oil market.
Rob, what do we know about the damage done to some of the infrastructure in the Middle East from the war and how that may impact supply coming out of that region?
Yeah, so there has been some reported damage, most notably to the Qatari gas export facilities. So I think on the damage side of the equation, there's probably more of a story there to think about the global LNG, liquefied natural gas balance, as opposed to the oil one. Quite interestingly, at the start of this year, we were already in a supply excess situation. And when we look out into the second half and even out to 2027, one thing that perhaps wouldn't have been on your radar is that we may actually see rising output from Iran itself, which perhaps exacerbates the supply picture even more. There probably are some lingering questions about, well, how quickly can you get oil pumping and flowing from certain fields in Iraq, perhaps, or places like that. But I think those impacts will be pretty marginal. And unless there is sort of continued geopolitics, maybe a deal can't be reached, a strait shuts down again or intermittently does, I think when you look out to 2027 at this stage, you would be sort of seeing an oversupply from a fundamentals perspective, but it all hinges on some of these geopolitical questions.
Reporting that you mentioned Iraq, and Reuters is reporting that Iraq is considering leaving OPEC if the oil producer group does not allow them to significantly increase oil production. How much of a blow would that be to OPEC in the 30 so seconds we have left?
Sure. Well, look, I think we already saw UAE exit OPEC earlier this year. They've signaled they intend to produce more. I think the coalition does seem to be fraying, and it's the cartel's ability to influence prices is clearly sort of they struggle with this idea of the individual countries wanting to maximize output. And so I guess if Iraq was the next shoe to drop in terms of OPEC, that perhaps wouldn't be that surprising at this point. And it lends to that idea that maybe next year we see an oversupply, especially if OPEC can't rein in production.